Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is June 6, 2019. Tonight I'm going to be talking about cattle, the ETF being COWB. And the reason for that is you can see that there's a lot of action going on here with a lot of different alerts that have just recently triggered. And they're basically telling two different stories. So bear with me, and I think that you might enjoy this. So the trends are all pointed the downside. Short, intermediate, and long-term all pointed the downside. The technicals, which is just a lot of different alerts all put into a single directional play, whether it's positive, negative, or flat. And so right now for cattle, the technical indicators point to the upside. Now we just recently had, with today's action, a slow low, a wave low, and a sub low. Three different momentum type indicators, a short-term, intermediate, and longer term, and they're all pointing in the same direction that a base is forming. And that being the case, it bodes well for the longs here. But it's a cautionary tale. But nonetheless, with cattle, if we look at some of the pro alerts, we can see that in the last couple of days, this is a daily alert, that we had a pulse low, which is a reversal. 4 trading days ago, we had a day's low, which is an early warning signal. Excuse me. And then we also had some profit taking recently on the short side, looking at the sell-off that we'd actually had as of late. So here's daily bars for cattle. It's a very liquid market, good enough, may not be the most liquid like the S&P and crude oil, but nonetheless a very viable market that if you haven't looked at it, you should take a serious look at it. So daily bars to the downside, and you can see that we had some volatility and a basing, and now we're having a little bit of a surge here. So what's been happening in the last few days, it's been telling us that a reversal is coming. And now that we've had a few bars, now some of the other indicators, the elastic level, the wave level, the power level, as I showed, that what they're doing is they're beginning to show some basing here as well. So what's this mean for us? Well, for ourselves right now, we are still short the market with some systems that went short the market in late May. So we've got some nice open position profits with that particular sell-off. And if we take a look at the seasonal tendencies to cattle, you'll see why I'm not necessarily worried here, on the short side. But here's a 10-year chart. A little triangle represents where we are right now, and you can see that in June, but not right now, you can see there's a little bit of a pop and a little bit of a sell-off. I'm just kind of focused on the here and now to basically the mid-June period. That's when we typically see lows in cattle in particular. We start getting more barbecues, there's just more use of the product, and you see that there's a volatile but a bullish bias to the market for the remainder of the year. So I think that we're kind of nitpicking her a little bit, but we're close to a seasonal low, but we're not necessarily there right now. Now it bodes well with some of those alerts that I was showing you, specifically the slow low, wave low, and sub low. They're definitely calling for something. So our short positions, we're going to be watching them very, very carefully in hopes that we can actually liquidate them, but we're going to follow the systems. The good news is that it's a 60-minute bar system, a 90-minute bar system, and a 60-minute bar system. So they're all intraday systems, meaning that we'll put ourselves in a position that if there is any type of a little rally to the market, more so than we've seen so far, I'm sure that the systems will start to unwind the shorts and start to establish new long positions. So watch cattle as a whole. Now, for some of you, you may never have looked at cattle and would never look at that particular market. So what I want to do is just take a look at our grading system that we actually have here. So if you come to the site, go to signals all the way down to market grades, and then what we do is we have this long list of all the different sectors. Here are the meats right here. We got cattle and hogs. And I have a whole presentation, an hour-long presentation that talks about how we make these calculations. Suffice to say, for just this particular deep dive, that cattle and hogs are A markets. And what that means is that they are receptive to systematic trading. A lot of the markets that we have are receptive to those things, but there's definitely a grading. There are still some C and B oriented type markets, but in this particular case, with cattle and hogs, they're both definite A related type markets. Technically, lean hogs is perhaps a little bit of a better market, but you're dealing with an A plus versus an A minus type market, but they're still in the A's. And so that being the case, when you do look at other alternative markets that you might consider trading, definitely take a look at the meats, because there's a definite opportunity to be had with those particular markets, because they are so receptive to what we're looking at. And you see there's enough liquidity. It's not like rough rice or milk or some of these other markets that don't have legitimate what I will term to be liquid type phase charts. We're dealing with a liquid market, liquid enough that you can trade it, and that you'd be able to put yourself in a position to take advantage of the way in which they seem to be receptive to systematic trading, hence the reason that they're A-related type markets. So bottom line for where we stand right now, there's a lot of bullish alerts and indicators that are starting to pop up. We're close to a seasonal low, and we would be looking for our systems in the near term to start to unwind themselves if we see continued strength here, and put ourselves in a position that we can hedge and or actually officially go long that particular market. But watch the systems. They will be a little more constructive and be able to handle things on an intraday basis. So with that, thanks very much, and we will look at some new markets soon. Bye-bye.